So, what are the key questions that we need to ask? What qualifies, obviously? Well, in terms of expenditure, there are certain categories of expenditure which qualify. For a start, it's revenue expenditure. We are talking about revenue expenditure here. So stuff that goes through your profit or loss account. Okay? What qualifies is qualifying staff expenditure. So effectively, cash payments to employees of the business who are undertaking research and development. I had a meeting with a pharma company and with HMRC last Friday. The company had claimed 100% of the staff costs for 3 or 4 of its R&D units. We've already had another meeting. There was no question they were undertaking genuine R&D. It was leading edge stuff. But HMRC did not accept that anybody spends 100% of their time doing pure R&D, because there is counselling of staff, there are feedback sessions during the year, there are admin type tasks that everybody has to do, that we all have to do in our job, which are not directly related to furthering the R&D process. And so in the end we negotiated 80% of the costs. It didn't matter because we found some other costs which they hadn't claimed, and the claim went up by 300,000. So it was a lovely meeting to have with HMRC on Friday. They came expecting the claim to go down, and it actually went up. We also had a very happy client, which we normally have, but sometimes we don't. The important question to ask here is, this is not about men in white coats. It could be. I mean, it's a bit like looking at two ends of the spectrum. At one end, you've got pure scientific research, you know, which you might call men in white coats. If you wear a white coat, I'm not being disparaging. There are cases which are obvious, definitely R&D. But there are cases at the other end which are equally not, and that is product development. And what I say to companies and business that I talk to is, the question to ask yourself really is, because this is the inspector, this is what really the tax inspector will ask at the first meeting, is tell me what projects you're working on. Fine. Tell me what technological or scientific uncertainties were addressed in that project. That's not so easy, because we're not talking about market uncertainty. So it's not right to ask, well, I'm not sure whether I can sell it. We're not talking about commercial uncertainty. Okay? We're talking basically about whether the product works. As soon as you cross that line and you say, right, we're not sure we've got something we can sell, but we know we've got something that works, okay? Then you're moving from R&D into product development. And this is not a product development tax relief. Now I know that the R&D process is iterative. You know, I've met a lot of head of R&Ds, and they'll draw circles. You know, you think you've got something, you find it doesn't work, it's back to the beginning, and it's circular, it's iterative. And HMRC do accept that, but they will ask you that question. So I tend to explain it in terms of a timeline, but that's not the way that R&D works. It works like that. But at some point, you've got to draw a line in the sand and say, well, actually, at that point, we knew the thing worked. We then did a lot of stuff around the cosmetic look of it and the market, all right, to make sure we can make money out of it. That doesn't qualify. So I mentioned this applies to revenue expenditure. You'll be buying laptops, at the least, I'm sure, in the R&D unit. You'll be buying desks, furniture. You may be buying special laser equipment, special microscopes, those sorts of things. If you're buying assets which go on your balance sheet as fixed assets, there is a 100% relief available for those. If you're sharing it in a team where some of what they do is R&D, some is not, you can come up with a reasonable basis of apportionment. And HMRC are pretty flexible about that. I've claimed, in fact, mezzanine flooring when an R&D unit was actually created physically out of a warehouse, which was a sales and distribution warehouse. And the inspector came around. He was happy that the mezzanine flooring was plant and machinery, which is a different technical point and outside the scope of this particular talk. but he could see that it was creating the R&D units, and he actually allowed 50% of the R&D of the cost of the mezzanine flooring, which was rather nice at the time. So don't forget, this is a revenue relief. The uplift of 175% applies to revenue expenditure. But think about the plant and machinery, the fixtures, the other things that you may be doing for your R&D team. So just a few questions quickly. Are you looking at being more energy efficient or saving water? Well, this is a separate relief. It's another code of tax reliefs. There's 100% allowance or tax deduction for expenditure on energy efficient or water efficient plants. But it has to be registered with HMRC, and the place to look is the eca.gov.uk website to see if that particular product that you're buying is registered. If it is, make sure you claim 100%. Why is that important? Because if you don't, it'll go in your general plant and machinery pool and you'll get 20%. If it's a fixture, you'll only get 10%. So at 20%, it takes well over 10 years to get 90% of the cost back. So far better to get 100% of the year that you spend the money. Must appear on the government list to qualify. Things which do qualify, things like boiler equipment, compressed air equipment, heat pumps, lighting, solar thermal. Time's moving on, I won't read them all, they're there. And if you go onto that website, you'll find more details about them, together with the particular products that have been given as accreditation. It's not available for long life assets. That's relevant for very large renewable energy projects. A long life asset is one with a useful life of more than 25 years. It's not available for that.